Hi and Assalamualaikum. My name is Zuhaira and I will present about introduction of worldcom. Worldcom was not only the largest accounting crisis in the United States history, but it's also one of the largest non-bankruptcy of all time. WorldCom was indeed a multi-billion dollar telecommunication corporation that established in 1983. During that time, the announcement of the telecommunication giant WorldCom has manipulated the books came soon after the fraud case of Enron and Tengok, which had shaken the entire financial market. Even though Enron and Tengok had no relation with the fraud case of WorldCom, it had affected the reputation of these two companies in the public eye. From the year 1999 to 2002, WorldCom senior executive who has directed by the founder and the chief executive officer, Bernard Eber, structured a plan to increase revenue in order to propagate WorldCom's stock price. Since then, WorldCom has been included in fraud by carrying out fraudulent accounting that was implied by the top management of the telecommunication corporation. Besides that, fraudulent activity was exposed in June 2002 when the company internal audit team, directed by Cynthia Cooper, detected more than 3.8 billion in the fraudulent balance sheet transaction. So, this is how the downfall of WorldCom begins.
Khadijah istri setia
Okay, hi, I'm back, so I will continue. Soon afterward, WorldCom was pressured to confess that it overstayed its asset worth more than 11 billion. WorldCom chief financial officer had also fraudulently taken billions of dollars in operating expenses and distributed them around the call property account as a form of capital expenses account. This is the reason that they are unable to display low amount of spending over a period of year instead of instantly reporting it to investor. Subsequently, the company raised revenue by nearly 3 billion in 2001 and declared the profit of 1.4 billion instead of a loss. Bernard Eber was then arrested of 9 charges of security fraud and was punished 25 years in prison for his involvement in the scandal. Sullivan was arrested with 7 counts and punished to 5 years after pleading guilty. Regarding major scandal by the business such as WorldCom and Enron, the government introduced the Sarbanes-Oxley Act (SOX) to increase investor trust in the financial market and public companies.
Greetings, I'm Umar Faris bin Shafi'i with the matrix number of UDE 190223. I'm going to be continuing with the summarization of WorldCom situation with synopsis of the relevant internal control problem. But before I start, I'm going to do something real quick. Alright, we are all set. In the year of 2003, Dick Thornburg had made an analysis about WorldCom, exposing that a missing of a key planning, usually portrayed as the proper corporate governance protocol. Instead, a strategic planning document was discovered. But in this document, there's only comprised of a review of the company's financial outlook. It doesn't even contain any sorts of strategic plans. Next, when WorldCom obtains new company, they neglected to appropriately incorporate the frameworks and policies to them, not only the prompted elevated levels of overhead, but also to an unstable and weak internal control environment. The accounting system in WorldCom were unable to stand with integrity, as all the acquisition were in a fast-paced pace. Because of this, it makes adjustment can be added manually in the system when any red flags emerges. Next, WorldCom was announced that their financial staff had made a transfer amounting $3.852 billion from regulatory expenditure to quality accounts in 2001 and also during the middle of 2002. Later, WorldCom was announced any line accounting irregularities, which once combined with the first announcement amounting to $6.412 billion, unreasonable deduction for online costs. Overall, from the second quarter of 1999 to the first quarter of 2002, WorldCom had improperly reduced by value and increased pre-tax revenue by $7 billion. Next, line costs such as cost of making voice call or transferring of data from one place to another can often be WorldCom's single largest expense. As a result, WorldCom management and external analysis pay special attention to the level and pattern of line values, as one of the key performance measure at WorldCom is the relationship with the income. Next, WorldCom Audit Committee failed to meet with the company's internal auditor. The UN agency provides several ways to enhance WorldCom's operation. Not only that, they also lack in the necessity of employment and data conduct companies control test.
Assalamualaikum to Sir Mustafa. I'm your Afifah. Today I would like to explain about 5 internet control system problem in WorldCom company. Okay, the first one is dishonesty in recording information. The fraudulent activity was exposed when the internal audit team, which is direct to Cynthia Cooper, was detect more than $3.8 billion in fraudulent balance sheet in transaction. And then the second one is top management managing style, ineffective strategy and the constant pressure from top management. They not have the good and smart strategy in management. Besides that, the constant pressure of top management give rise to aggressive pressure and competitive culture that cannot contain good communication about need for honest, true and ethics in company. And then the third one is the incomplete in managing company. When the accounting system in WorldCom were incapable to stand to integrity and efficiency, as all the acquisition were in fast pace. Because of this, it leads to the adjustment can be made manually in the system when any red flag emerges. Next, unsuitable accounting practice when the WorldCom transfer transmission line costs from the current expenses to the capital account. And then the last one is lack of internal audit. Auditor lack of the proper training and experience to conduct the testing of the company. Okay, now I will continue to the next recommendation 1, which is dishonesty in recording information. Okay, auditor should ensure top management is mindful of the risk and maturity fraud, and a fraud cases must be known to all employees. And then WorldCom need to create fraud awareness training and fraud policy. Besides that, auditor may analyze and comment on WorldCom goals of reducing any unsustainable performance measure. And then fraud detection preparation underline that all employee, not just auditor, have to have position to prevent and detect fraud. And then the last one is the company fraud policy must establish clear plan is action which set tone of how company is going deal to with fraud.
Assalamualaikum sir, my name is Adarna. My matric number is UDE190204. So I will continue for the second one of a recommendation based on WorldCom problem. So the second one is top management managing style. They do not have good and smart strategy management in WorldCom. So tone at the top management level should apply in the WorldCom top management to the ideal and style of leadership, commitment to values such as honesty, integrity, dignity, fairness, and ethical conduct within the company. These principles play an important role in influencing the organizational culture, working procedure, and setting goals, and also identifying strategies. The next one is incompetent in managing company account. The worldcom need to ensure the sustainability and progress. Considering the important contribution of the accounting information system (AIS) organization, it is often concerned with a contribution to operational performance. What makes accounting information efficient? It is because on some factors. The first one is reliability. Reliability should be calculated in terms of low maintenance, accuracy of detail, and the capacity to manage exception. And another factor is simplicity. The accounting information system should be easy to operate, maintain, and audit. It should prevent unnecessary functionality as they bring difficulty to the system. Another one is inappropriate accounting practice. Financial practice apply to a collection of common methods or basis operating procedure in worldcom's company that is accurate for accounting, financial reporting, budgeting, and other business management operation. Successful financial practice outlined in the SOPs comply with the best accounting practice and the federal and state regulatory law, while being comply with the long-term priorities and future development strategies. The last one is lack of internal audit. worldcom must aim to find opportunities to change in many ways. The audits must offer details on the successful implementation and management of the quality management system (QMS). Through taking the time to take an unbiased look at the operation, the worldcom's internal auditors will find concerns that could go missing during day-to-day operation. In addition, they may be able to recognize problems related to linkage between processes by evaluating and taking action on change opportunities to help the business better, and will lead to cost savings and also increase the performance. So that's all from me. Thank you. I will pass to my friend to the next slide.
Hi, Assalamualaikum. My name is Muhammad Syafiq bin Safizam. My metric number is UDE 190186. Now I'm going to present for my part, which is fraud triangle related to worldcom case. First and foremost, fraud triangle may be a framework commonly utilized in auditing to explain the motivation behind an individual decision to commit fraud. There are three elements of fraud triangle. First is opportunity. Second is pressure, also known as incentive or motivation. And lastly is rationalization, which is called so as justification or attitude. For fraud to occur or happen, these three elements of factor must be present. So back to the topic, which is fraud triangle is related with the worldcom case. Yes, this fraud triangle also applies to the worldcom case, which is, as I mentioned before, that these three elements must be present. First, the pressure. Second is opportunity, and thirdly is rationalization. worldcom has experienced high merge and acquisition activities that have been eased the company debt mark for the investor. So the first one, I'm going to talk about opportunity. So the opportunity during this case was the elimination of the debt and had high level of capitalization within the market, thus resulting in fraud. The management of worldcom had been using the chance of capitalizing the expenses which is not allowed as per GAAP, and hence showing the increasing of the revenue. Moreover, the rise within the revenue provide the chance for the merge in situation of particular network of corporate. So now the second element is pressure. WorldCom having a high pressure of keeping the debt equity ratio as low as possible. Then they need to conduct fraud so as they to stay a debt low, maintain a solvent position. They also need acquire external asset and have undertaken much of fraudulent basis. Because of this, the management of WorldCom having a high pressure to commit fraud. Last but not least, the last element for the fraud triangle, which is rationalization. The rationalization of the management under the WorldCom case was undertake action to stay the extent of the debt below the critical level of the corporate by way of hiding the debt and showing the high level of increase of income so as to point out the future of WorldCom solvency of the corporate. Thus, WorldCom fraud contain all the wealth of fraud triangle.
Assalamualaikum and good day to Sir Mustafa Buhari. My name is Nur Fatiha, UDE 190205 from UDE 19 Section 3, and I'll be presenting the last part of the case study, which is the conclusion. So to wrap up the WorldCom's case study, it is already known that WorldCom had unfortunately fallen in a dark hole of fraud because of the greed of the top management led by Bernard Ebbers, which was the chief executive officer back then. However, in 2002, WorldCom was exposed with a fraudulent balance sheet transaction that was worth billions of dollars, and from that, it can be seen that the biggest and the most successful company in the public eye contradicts with the real truth of the company's well-being. It is for sure that every business company struggles in their own way to balance their financial to generate more income and lower their expenditure by pushing their business honestly in the market. However, WorldCom was the opposite because they decided to take a shortcut to success by falsifying their financial records but failed miserably after a few years of their unethical behaviors. WorldCom thought that making fraudulent statements in their financial records would profit them more, but once the truth was discovered, they became the perfect resemblance of the old saying, chickens have come home to roost. So from the fraud case by WorldCom, it can act as a guide to everyone in the market that operates business to always be honest in operating business. It is understandable that a business is struggling. However, there are several ways to overcome the obstacles in operating a business. Thus, business operators or top management of a company should always be prepared for risk and solution to them. So, it is important to have high educated people in the organization in order to have a well-mannered and organized system in the company. Therefore, we must have a great planning in operating a business by taking important steps such as segregation of duties, sustaining internal controls, and train staff to avoid fraud in order to guarantee that fraud would not take place in the company. So that's it for the conclusion. Thank you.
Assalamualaikum to Sir Mustafa bin Buhari. My name is Nur Nadira binti Muhammad Hafiz and my matrix number is UDE 190197. Today I'll be continuing the presentation with the final component which is for us to discuss the challenge that may be faced by the auditors in ensuring good internal control are in place. Okay, there are few challenges that are faced by auditors. Firstly, auditors fail to link further processes to control-related risks. This control risk is actually one of the audit risks. This is a risk where that material misstatements are not detected or also not able to be prevented by the client's control system. Some auditors, they believe that they can revert the control risk assessments without considerations from the client's internal control systems. Auditors should not default to any level of control risk and should have reasonable basis for their assessment of control risk. When auditors default their client's control risk assessment without analyzing the implementation of internal controls, this may lead to the auditor failing to detect the risk in the company. Then, this assessment of design controls are executed to provide the base in designing an effective response in facing the risk of material misstatement. Thus, substantive audit approach could be implemented as long as the audit processes are responsive to the risk of material misstatement. Next challenge that may be faced by auditors, that the auditors may have evaluated or assessed the control risk improperly. Once the auditor have assessed the risk of material misstatement, which includes the risk associated with the client's internal control, the auditor may have performed further audit procedures that are responsive to the client's risk. The auditor should not simply perform the same procedures that were required for another client, despite being in the same industry, or even those audit procedures are performed from the previous years. As an example, we consider two clients, company A and company B, are both in the same industry, which are the manufacturing industry. Despite them being in the same industry, both of the company might have different material misstatements or different errors that are in their internal control system. This is due to them having different top management, them having different way of accounting approach. Thus, the auditors must not generalize them according to their industries. Next, let's continue with Zuhaira.
Hi and Assalamualaikum, my name is Zahra and I will continue with my part, which is final examination component. Third point is auditor does not understand which control are relevant to the audit. All control assessed as significant by the auditor are not limited to those controls that the auditor expects to examine for operational effectiveness. In addition, the control activity applicable to the audit include those control activity that auditor consider necessary to understand in order to determine the risk of material misstatement at the level of association. Control applicable to the audit can change depend on the size, complexity, and the nature of the service of the client. Next, auditor assume that the client has no control when the use of computer in recording accounting transaction. The auditor of less complex organization also believe that their client do not have control in place. If the client did not have any control in place, there would be no way to avoid or identify and correct material misstatement. If that is so, it will not be possible to conduct adequate audit work to reduce audit risk to an appropriate level.